in the second half of the show. So we're already at the 15-minute mark. So we know we got to get to the question of the day. I'm going to take a pause right here from that, and we're going to get to the question of the day. All right, and before I do the question of the day, I got a couple more shout outs. I want to shout out Daryl Perry. I want to say happy birthday to him. He celebrated a birthday earlier this week as well. I want to shout out Eric Gibson. I want to shout him out. He also celebrated a birthday earlier this week as well. And I want to shout out Michi Salter, who also celebrated their birthday earlier this week. So happy birthday to all of you. Okay, so the question of the day. The question of the day is sponsored by Cute as a Cupcake, cupcakery and bake shop where the cupcakes are more than just cute, they're delicious. Cute as a Cupcake is located at 2008 West 81st in Maryville, Indiana. Get by Cute as a Cupcake and tell them that the 800 credit score man sent you. All right, so let's jump to this question of the day. The question of the day actually comes from Ron. Ron is out of Iowa. I think we had an Iowa last week. So thank you, Ron, for submitting your question. He contacted me on email, 800creditscoreman@gmail.com. That's where you can contact me. You can submit your questions. So thanks a lot, Ron, for sending in this question. So his question is, why did a collection that was removed from my credit come back on my credit report? So the collection returned. So here's the conversation with me and Ron. So here's what happens. So you submit a dispute for a collection that's on your account. Now, it could be yours, couldn't be yours. Oftentimes, more often than not, a lot of people are disputing things that actually are theirs. But of course, there are loopholes within disputing. So it may actually be yours, but the timing is incorrect. The amounts are incorrect. Something is wrong or inaccurate about that particular collection, and you can go ahead and dispute it. So in this particular case, Ron disputed an account. It came off of one of the credit bureaus, but it didn't come off the other two credit bureaus. And the other two credit bureaus are saying that this debt is yours and it has to stay on your credit report. Now, Ron wasn't satisfied with that, and I don't blame him because it did come off one. And when you submit a dispute and through the credit bureau, let's say you submit a dispute with TransUnion. You submit that dispute with them. They go ahead and contact whoever the collector is, that particular collection agency or company. They contact them and ask them for information to verify that that's actually your account. So they'll write a letter or send them an email or however they communicate with them and say if it is or it isn't. All of that information should be the same, whether you dispute it with TransUnion, Equifax, or Experian. All that information should be the same. They should all get the same letter. So if TransUnion, in this particular example, went ahead and removed it, then why shouldn't Experian and Equifax go ahead and remove it as well? In this case, they didn't. They're saying that it is his debt. Oftentimes what happens, and what happened actually in this particular case, is that this particular collection was disputed several times. So you can dispute it and you didn't like the results, and Ron didn't like the results, so he disputed it yet again. And one of the times that he disputed it, that he disputed the account, the collection agency did not respond. So if you've been listening to the 800 Credit Score Man show, that they actually have 30 days to respond if you submit online. Now, if you mail it, they get 35 days just because of snail mail. So he disputed it again and again and again. And then eventually, the collection agency did not respond. And so the credit bureau took that information off of his credit report. Now, once the collection agency realized that they missed that 30-day deadline, what they did was contact the credit bureau and say, sorry, we missed the deadline, but this particular debt is this person's debt. So what happened was the credit bureau went ahead and put it back on on Ron's credit report. That happens way too often. People want to know, why does it happen? It happens because of that. They don't necessarily have a quote unquote grace period, but if the debt is actually yours, the credit bureau will sometimes honor that debt is yours and place it back on your credit report. Sometimes the credit reporting agencies get inundated with a lot of different dispute letters, and they weren't able to catch up in this particular case. And so that's why most likely it went back on your credit report. Now it is removed off the one, and should stay off the one unless the collection agency decides that they want to go ahead and place it back on there. So that's what happens. People ask all the time, it came off my credit report and now it's back again. That's one way that it comes back on your credit report. Sometimes things come back on your credit report because that particular collection agency sold it to someone else, and since they sold it to someone else, it came off necessarily from the one place and now it's at another place, and it's quote unquote back on your credit report. Of course, I always advise that you go ahead and dispute those items if you don't think that they're yours, especially. But then if there's something inaccurate about it as well, please go ahead and dispute those items on your credit report. So, Ron, thank you so very much. I enjoyed our back and forth via email. 800creditscoreman@gmail.com is how you can catch me. Please send in your questions to the 800 Credit Score Man right there, 800creditscoreman@gmail.com. I will answer your question directly to you, and then you may become a part of the 800 Credit Score Man Show family. So, Ron, you welcome. Officially, you are officially a part of the 800 Credit Score Man Show family. Again, the question of the day is brought to you by Cute as a Cupcake, Cupcakery and Bake Shop, where the cupcakes are more than just cute, they're delicious. That's 2008 West 81st in Maryville, Indiana. Please, guys, get by Cute as a Cupcake and let them know that the 800 Credit Score Man sent you. All right, so let's jump back into what are lenders looking for when it comes to your application to apply for a mortgage. So when we left off on the other half of the show, we talked about debt ratio. So they're looking at your debt ratio. How much do you actually have incoming to your home in terms of income, verifiable income, and then how much do you have going out? They are looking at your gross. That means before taxes. So if you make $100,000, you divide that $100,000 by 12, and whatever that amount is, that's what they're looking at. That's what they're giving you, basically giving you credit for having that kind of money. Even though your net, what you actually bring in, is going to be, in most cases, much, much less than the $100,000 that you make per year. So they're looking at your gross, and then they'll take all of your debts, and they'll make a calculation, and they'll determine how much money you have left over and a percentage at the end of the month. That's one of the main criteria and one of the main reasons people get denied, because in their estimation, meaning the mortgage lender's estimation, you don't necessarily have enough money to purchase this particular home at this particular amount. Maybe you can get approved for a lesser amount, or sometimes you're looking for a $250,000 home, but they say you have enough money for a $400,000 home. That doesn't mean you need to take it. Doesn't mean you need to go and step up and get you a $330,000 home. Stay within your budget, what you think is good for you, because in the long run, it's going to be best for you in the end on how much money you have going out on a monthly basis. So that's what they're looking at when you talk about your debt ratio, how much gross you have minus the amount of money that you have going out. So they're going to take most of that information from your credit report. So they'll see you have a car. They'll see you have, if you currently have another home, or if you have a boat or something like that, and your credit cards and any other installment loans, student loans, all of those things. They'll see that. And that's where they'll take that information from. Now, when you're filling out your application, they're also going to ask for some things. So here's some documents that they'll need from you. Now, this isn't an exhaustive list, but these are some of the most common, and in your particular situation, they may be asking for something else. So some of the documents you'll need: at least 2 pay stubs. The last 2 pay stubs they'll want to see from your employer. They'll want to see your W-2, so they'll know exactly what that particular gross is we talked about, and they'll be able to see your net, even though they're not going to use that. But they'll be able to see that from your W-2s. They may ask for your tax returns, maybe not just for last year, maybe for 2 years, maybe for 4 years, but they may ask for your tax returns as well. then they're also going to ask you to list your own bills. So even though they have your credit report in hand, they're going to ask you to list your own bills. Sometimes monthly debts are not on your credit report. And it could be a place that you actually went to and you bought a car there, or you went to somewhere and you bought a TV or what have you, but maybe it's not on your credit report. So they're looking for things of that nature as well. So they're looking for your list of bills. Now, typically, they're not looking for your utility bills, your cell phone, cable, things of that nature. Typically, they're not. Now, what I have seen, though, is if you're on the lower rung we were talking about, you got a 585, you got to have a 582 be approved, they may ask for some of those things. No matter what your income is, they may ask for some of those things as well, because they just want to make sure that you're able to pay. That's what this whole thing is about. It's about being stable and about being able to pay. Not just now, what your current situation looks like, but also in the future as well, because they will assume this person's going to move in a house. They're going to get some new furniture, some new bedding, things of that nature that you may want to do. They're not going to count it against you because they can't, but they're going to be looking and thinking about those things. They're also going to want to see your savings. So they want to know, how much do you have in a 401k? If you have one of those places like, say, TD Ameritrade or something, and you've got some stocks that you've bought, they're going to want to see those statements as well. They're going to want to see your savings account. So they want to see how much money you actually have in your savings account. When you get this home, we talked about earlier, you might have to put 1% down, 3.5% or 5%, or maybe you're going to put 20% down. They want to see where that money is currently. So you can't go add money later on, because then you're going to have to show them where that money came from. And oftentimes, they'll think that you borrowed that money. You might have borrowed it from your mom, your cousin, your job. If you borrowed that money, which means there's another debt for you to pay back. So then that may go into your debt ratio as well. So that's what they're looking for. So they want to see what your savings is. So also with that, be careful about adding large sums of money to your savings account and not showing where it came from. So if you transferred it from your checking account to your savings account, no problem. They can look at your statement and they'll be able to see that. And of course, they'll want to see your bank statement, your checking statement as well. They'll want to see that. What they're looking for there, and they may ask for 2 months worth, they're looking for, let's say you have a reoccurring bill. It's $250 a month. It's not on your credit report. And they just really want to know where that money is going, because that's another bill that you have out there that is not disclosed in your application necessarily. And they want to see where it's at. You could actually owe the IRS money. You could owe the IRS money and it's not on your credit report. So they want to see if you got $250 going out every month to the same entity. They want to see. Now, if you do direct deposit with, your kid's child care, your kid goes to private school or in college or something, and you have those kinds of bills on there, they're not necessarily going to count those against you, but they do want to see it because they want all the information before they go ahead and approve you for this particular loan. And then what you may have to do is send an explanation of issues. So if you have any issues, current or in the past, you may have to give them a letter that says what the issue is. Now, here's my advice when you do a letter for a mortgage lender, for the underwriter to take a look at. Make it concise, make it short, don't embellish, don't give all the backstory of what's going on with that particular one, because you don't want them to look at that particular letter and pick out something that to you was innocuous and try to make a big deal out of it and say, we can't go ahead and approve this person for a loan. So those are some of the documents that you're going to need when it comes to applying for a particular mortgage. What do you want? When you apply for a mortgage, make sure you get a good faith estimate or a HUD-1 from them. It'll talk about, in that particular document, it'll talk about how much the home is, whatever fees you're going to be paying for them to close this loan for you, the taxes, the title insurance, all of those things should be included in your HUD-1, which will also give you your interest rate and your APR, which are two different things. Maybe we'll talk about that next week. Or you can email me, 800creditscoreman@gmail.com, if you want to know what the difference is between your interest rate and your APR. and then it also have your payment on it.